Hi, this is CMA Swarupa. Welcome to our channel. Our channel has a lot of insightful resources for CMA students to prepare for their exam. So do check out our channel and subscribe to our channel for regular updates. And in this video, we are going to take up section B, that is the essay type questions of Financial Accounting CMA Inter June 24 exam. If you like our video, click on the like button and give your comments in the comment box. So coming to the video, we'll see the first question, that is question 2A. So yesterday I had uploaded the same discussion video, but the video was not clear and there were one or two calculation errors. So I have corrected and I am re-uploading the entire video once again. So first question 2A. On 31st March 2023, in the trial balance of Singhania Brothers, balance of machinery account appears to be 19 lakh 80,000. So on 31/3/23, the balance is 19 lakh 80,000. The firm follows a depreciation of 15% per annum on the written down value method. So what will be the opening balance? Opening balance will be 19 lakh 80,000. It is into 100 by 85. So that is what we have arrived here. On scrutiny, it was found that the machinery appearing in the books on 1/4/24 at 4,50,000 was disposed on 30th November 22 in exchange for another machinery for 3,50,000. So there is a sale of machinery and purchase of machinery. So for sale of machinery, the actual cost is 4,50,000 and it was sold on 30/11. So from April to November, we need to calculate depreciation at 15%. Once you reduce that depreciation from the opening cost, you will get the balance as on the date of sale. Okay, and the replaced assets value is 3,50,000. So the difference between the written down value as on 30/11/24 and the sale value gives you the loss on sale of machinery. And the new machinery is purchased for 3,50,000. So for this 3,50,000, we need to calculate proportionate depreciation from 1st December to 31st March, that is for 4 months, we need to calculate depreciation at 15%. So once this basic data is computed, we have to open a machinery account. In machinery account, you are bringing the opening balance, which we have calculated. Okay, the addition of new machinery, which is again debited because it is an increase in the machinery. 3,50,000. What should come in the credit? In the credit, the sale of machinery should come in the credit. So all the sale detail. What is the written down value of the asset that is sold? Which is 4,05,000 arrived over here. And then the loss on sale of machinery. So if you add both of this, you will get 4,50,000, which is the cost or the opening balance, which is here included in this. So we are just crediting that in this model. Then depreciation for the new machinery that is calculated over here. We bring that also. Then 23 lakhs is a total quantum of machinery, out of which 4,50,000 is sold. So for the balance quantum of machinery, we need to calculate depreciation at 15% for 12 months. So that is being calculated over here and we have to give a credit for the depreciation. So once you post all these entries, you will get the balancing figure, which is the balance carried forward. So in your question, you are asked to calculate profit or loss, which you have computed. Then total depreciation, which is nothing but the depreciation of the old machinery, depreciation of the new machinery, and the balance depreciation for other machineries. Then book value of machinery as on 31/3/23, which is from the machinery account, we are calculating the book value or the closing value as on 31/3/23. So this is how this question should be approached and solved. Now next one, trial balance of Rajesh and brothers as on 31st March 2023 does not agree. Okay, and there are some mistakes. So the accountant placed the difference in suspense. So there is a suspense account, a debit in suspense account 26,700. So for 26,700, debit entry is missing. So they have put that entry in suspense account and tally the trial balance. So we have to open a suspense account with the debit 26,700. And on 25th April 23, the following errors were detected. So it is relating to correction of errors. So any kind of one-sided entry will impact your suspense account. Okay. So 4,500 allowed as cash discount to a debtor was not debited in discount account. So 4,500 is a cash discount. Okay, that is given to the debtor. It was not debited to discount account. So all the other accounts are tallied. In the debtor, the correct entry is made. In cash, correct entry is made. The discount entry, the discount debit is not given. Okay, so it's a one-sided entry and it will affect your suspense account. So now what we have to do? We have to credit the suspense account and debit your discount account. Give the debit, give the actual effect. So giving the debit in discount account and crediting your suspense account. Second one, credit sale of 6550 was posted to the credit of customer's account at 5650. So whenever there is a credit sale, the entry is customer to credit sale. So customer account should be debited. But here what they have done, they have credited the customer account. So first we have to reverse this entry. So first there has to be a debit of 5650. Then we need to make the actual correct entry, which is 6550. So there should be double debit of 6550 and 5650 in the customer account. So which account will be credited? It's a one-sided entry, so suspense account will be credited. So we have to, in this suspense account that we have opened, we have to credit the customer account with both these values. Then third one, machine purchased on 1st October 2022, 50,000 in cash was posted to purchase account. Okay, so it is a error of principle. Machinery account, machinery purchase is an asset account. It's an asset that is purchased. So the asset account should be debited, but the purchase account was debited. So because of this debit, your trial balance is not getting affected because it is the correct debit that has been given, only the account is changed. But because the account is changed, depreciation is not charged because depreciation will be charged only to the asset account, not to the purchase account. So depreciation is not charged for the entire 50,000. So the complete entry is missing because of this error of principle. So here suspense account will not get affected. We just have to make a fresh entry for depreciation. Okay, depreciation to machinery, we have to make a fresh entry. Then sales book overcast by 10,000. When sales book is overcast by 10,000, it means 10,000 rupees is excess credit in sales. Okay, so there is an excess credit of 10,000 in sales. So we need to correct the entry. So what we have to do? Debit the sales account because there's an excess credit. So you have to debit the sales account. Which account will get credited? Suspense account will get credited. So with that, we have to, in the suspense account open, there is a debit of 26,700, credit for discount, credit for customer account, credit for sales. The suspense account will tally. And for depreciation, it is a two-sided error. So a complete fresh entry has to be passed, which was omitted. So the next question that we have is on consignment accounting. So consignment accounting, the data you need to open a consignment account and a loss in transit account and the consignee account as well. So here, Kush of Kanpur sent to Jatin 400 electric sewing machine costing 24,000. So I have just put it here in consignment account, goods sent on consignment 24,000 into 400, which is the cost price. Kush paid freight of 96,000 and Jatin spent 31,200 on clearance. 1,500 per sewing machine is the sales expense. In transit, 10 sewing machines were stolen. So 10 sewing machines stolen in transit. So I am giving a credit in my consignment account, 10 into 24,000. And where am I taking this amount to? To loss in goods in transit, 2,40,000. The clearance expenses and freight expenses is for 400 units. Okay, but now we need to bifurcate into 390 units and 10 units. 10 units, which is loss in transit, and the balance will go into the consignment account. So we need to calculate what is 96,000 is for 400 units. So 96 by 400. 31,200 is for 400 units. So 31,200 by 400. That gives you per unit cost. Now per unit cost into 390 gives you the freight, and here that amount into 10. Then consignee expenses, we have two consignee expenses. One is your clearance, and other one is the selling expenses. So clearance expenses I have just taken per unit 78 into 390, and 1,500 is the sales expenses. It is based on the number of units sold. So number of units sold is given in the question, which is 210 plus 130, that is 340. So 340 into 1,500. So we get the total consignee expenses. Now, loss in transit account, we have posted the total cost. That is the initial cost 2,40,000 and the freight and consignee expenses 3,180. Now, how much did we receive from insurance? From insurance company, 1,85,000 is received. So the balancing figure will be your profit or loss that will go into P&L account. Then consignment account, we come back to consignment account. So we have goods sent on consignment, freight, consignee expenses, and loss in transit. Now what is the balance? Sales. Sales is made 210 at 32,000 and 130 at 35,000. So I'm just multiplying 210 into 32,000 plus 130 into 35,000. So we get the total sale value. Now commission. Commission 5% on the sale value. So I have 1 crore 12 lakh 70,000 into 5%, which is 5 lakh 35,500 is my commission amount. But the question does not end there. In the question, it is said that commission of 5% on total sales plus 1/4 of the amount by which the sales less total commission exceed your invoice price. So invoice price, what is the invoice price? It is 30,000. Okay, so we are selling 340 units. So 1 crore 20 lakh, that is the invoice price. What is the sale proceed? It is 1127 123 zeros. Yeah. So 1 crore 5% commission we have already calculated, which is 5 lakh 63,500. So if we deduct these two, we are getting the net difference amount, which is 5,06,500. This 5,06,500 includes the commission 1/4 of the value also. So this is not 100%. This is 125%. So what is the 25% or 1/4 share? It is 25 by 125, which is 1,03,300. That is the additional commission that you are going to get. Now, balance left, I have 400 units, out of which 10 is lost, 340 sold. So the balance comes to 50 units. So this 50 units is the closing stock. We need to value closing stock. The value of closing stock is the base cost, that is 24,000 plus freight and the clearance expense. So that again we have calculated per unit, okay, which is 240 and 78, multiplied for 50 units to get 12,15,900, which is the closing stock value. Once all this is posted, the balancing figure is the profit or loss. Okay, this is how this question should be approached. Now we will go to B, 3B. Okay, 3B is about installment, so it is about hire purchase. Okay, A car, Rana purchases a car on hire purchase. Okay, total cash price is 4,50,000. 90,000 is the down payment and balance installments are given. Interest rate is given. You need to calculate the interest paid in each installment. Very simple question. So cost is 4,50,000. 90,000 down payment. So what is the balance principal amount? 3,60,000. So I am just bifurcating principal, interest and total here. Principal is 3,60,000. What is the sum of all the installments? The sum of all installments comes to 4,28,460. 3,60,000 is the principal amount. So the balance figure will be my interest. So interest is taken. First installment, how much? 1,70,000 is the first installment. Interest is 10 percentage. So for this 3,60,000 principal, 10 percentage interest is charged. Difference between 1,70,000 and 36,000 gives you the principal amount repayment. Then again balance is calculated. In this 2,26,000 interest 22,600. Total this is given in the question 1,50,000. I am just reducing from the total interest amount. I get the principal repayment component. Again balance. Again the same method. So the sum of this gives you the interest. Total interest, and this is how the interest per year is being charged. Okay. Now next question, fourth question. Okay. Sohan, he is a proprietor. He is not maintaining books, so it is incomplete record question. You need to prepare incomplete records immediately. You should know that you have to prepare two statement of affairs, one as on 1/4/22 and one as on 31/3/23. Okay. So I am preparing a statement of affairs as on 1/4/22. Just posting the data that is given in the question. Plant, furniture, investment, stock, debtor, cash. Okay, bank balance, it is a credit balance. So it comes on the liability side as an overdraft. And then creditor. What is the balancing figure? Balancing figure is my capital. Okay, and you need to prepare the same statement of affairs for 31/3/23 with the data that is given in the question. Okay, 2,14,000 investment, stock, debtor, cash, creditor, bank. We get the balancing figure, which is the capital. So now we have the opening capital and we have the closing capital. Now what is closing capital? Closing capital is opening capital minus drawings plus any addition of capital plus profit. So this 11,85,000 is 8,10,000 minus Sohan has drawn 3 lakh during the year, introduced 65,000 as additional capital. So it is 8,10,000 minus 3 lakh plus 65,000 plus and profit. Then the net balancing figure is 11,85,000. So if we just solve this formula, we will get the net profit to be 6,10,000. Okay. Now there are certain entries, certain adjustments which has not been done, which is required to be done. A provision of 5% on Sunday debtor is necessary. So what is our debtor? Debtor balance is 8,80,000. So on 8,80,000, 5% debtor need to be calculated. Then depreciate plant at 15%, furniture at 10%. Interest on opening capital at 10%. Then manager is entitled for a commission at 10% of net profit after charging such commission. So these are the 4 adjustments which has been asked to do. So provision directly 8,80,000 into 5%. Plant 15% of 2 lakh, you get 15,000. Then 10% on 14,000, that is 1,400, which is furniture's depreciation. Then interest on capital, opening capital 10% per annum. Opening capital is 8 lakh 10,000. So on 8 lakh 10,000, 10%. Then you get the net profit. If you reduce from 6 lakh 10,000, reducing these expenses gives you the adjusted net profit. Now, commission. Commission is after charging such commission. So we need to calculate 10 by 110. So it is 45,3600 into 10 by 110 will give you the commission amount. And then if you deduct that the net amount will be your adjusted net profit. Next, we will come to question number 5, which is relating to partnership accounts. Okay, so in partnership account, the ratio, profit sharing ratio is, so the profit sharing ratio 3 is to 2 is to 1 between X, Y, Z. Okay, and Y has retired on 1st April 2023. So year end books detail is given, and the one of the partner has retired at the beginning of the year. Okay, so first thing, goodwill. Goodwill is to be calculated on the basis of 4 years purchase of super profit method. So super profit method, super profit is the difference between average profit and normal profit. Okay, so normal profit is average capital employed into the rate of return. So that average capital is 2 lakh 10,000, 26 lakhs 10,000. Normal profit will be 10% of 26 lakh 10,000, that is 2 lakh 61,000. Average profit is the average of these 3 years profit. And there is this fourth point that you should see. Fair remuneration to the partners for their services 1,20,000 per annum. So here trading profit for 3 years is given, and separately remuneration detail is also given. So from each year we need to reduce 1,20,000 to be the salary and arrive at the net profit. And it is the average of that net profit that we should take. Okay, so it is 3 lakh, 6 lakh 30, 5 lakh 40, 6 lakh 75 by 3 minus 1 lakh 20,000. Because it is the same 1 lakh 20,000, I have first taken the average profit and just reduced 1 lakh 20,000 from it. So the difference between normal profit and average profit is the super profit. Okay, super profit multiplied by 4 because it is 4 years purchase into 4 gives you the goodwill. And what is Y's share? Y's share is this goodwill amount into 2 by 6. That is Y's share. Next, fifth, if you see the 6th point, provision, then revaluation of land. So fifth, 6th and 7th point are mainly towards, it is 5th, 6th and 7th point is relating to your revaluation. But what does the 7th point say? Due to revaluation, the value of the liability and assets are not altered. So the value should not get altered. So we need not prepare revaluation account. Instead, we have to prepare memorandum revaluation account. So in memorandum revaluation account, we are bringing all the stock and furniture is to be depreciated by 10%. So we are bringing 10% of stock and furniture into the memorandum revaluation account, debit that account respectively. Then 5% to be created towards doubtful debts and 18,000 to be created towards bill discounted. So provision for doubtful debts, 5% of your debtor balance. Provision for the bills discounted, again 18,000, that is given in the question. The same thing, we are posting it. Land has been appreciated by 2 lakh 35 appreciation, so it will come in the credit of revaluation account. Land and building 2 lakh 35,000. and investment is to be taken at its market value. So in the question itself, in this they have given the market value to be 4,10,000 and the actual value, book value is 3,75,000. So there is an appreciation in value, it has to be credited. The balancing figure is the profit which will be distributed in old profit sharing ratio. And when we need not, when there is, in the question it is mentioned that the revalued figure should not appear in the balance sheet, then we whatever entries we have made in the first part, we just have to reverse it in the second part. Okay, just bring it in the opposite accounts sides. Then the difference will be shared among the partners in their new profit sharing ratio. So X and Z will only share it in 5:3 ratio. So capital account of the partners is credited with their opening balance. Then we are just bringing the profit on revaluation, and then on the debit side, we are bringing the loss on revaluation between the two partners X and Y in new profit sharing ratio. And this is the old profit sharing ratio. Goodwill, 3,12,000. We have identified it to be the goodwill that is payable to Y, and that will be paid by X and Z in their gaining ratio. So I have calculated the gaining ratio as well. Gaining ratio is just the difference between your new profit sharing ratio and the old profit sharing ratio. Balancing this, and it is also mentioned that X and Z are bringing certain amount in the question. So in the last part of the question, additional capital of 3,50,000 and 7,20,000 has been brought in by X and Z. So that we are crediting using the bank account. So balancing all this, we will get the amount that is to be paid to Y and also the balance carried forward in the account of X and Z. Then we have to prepare balance sheet. So balance sheets, everything will be as per the old statement. So debtor, bank, stock, investment, everything will be as per the old statement except for bank, because in bank there are certain additions and deletions that we have made. So here there is an addition of 3,20,000, 7,50,000, and there is a payment of 10,97,500, which has to be given effect. So it is 2,48,000, which is the balance there, plus 3,20,000, 7,50,000 minus 10,97,500. That gives you the net balance in the bank account. Creditors, bills payable, reserves, everything remains the same. And X and Y capital, whatever is the balance carried forward, the same thing if you post it, your balance sheet will tally. Then we will go to the eighth question. So in the eighth question, so eighth question is mainly about accounting standards. Accounting standard AS12, it is a direct question that you can just answer. And there is also another theory question about piecemeal distribution, which comes in partnership, which also can be answered just based on basic theory, basic understanding. So we have 8B where we need to practically solve the question. So it is about preparing bad debt, provision for bad debt, okay, and what show it the effect in the P&L account and balance sheet. So as on 31/12/22, debtor is given, which is 50,000, provision for doubtful debt, which is 5,000. Okay, and on 39/2023, both there is a 3,000 which was written off as bad debts. Okay, and 400 is being recovered, which was earlier written off as bad debts, but now it is being recovered. Then on 31/12/23, the closing debtor balance is 40,000, but out of which The customer who owed 800 was to be written off as bad. So the balance is 40,000, but we need to write off 800 rupees additionally as bad debt. Okay. So what will be the net debtor? It should be 39,200. So we need to open a bad debt account. So bad debt account 3923, 3,000 rupees. Then on 31/12/23, 800 rupees. It gets debited. Then what is the credit? It should go into provision for bad and doubtful debts account. We'll open provision for bad and doubtful debt account. Bad debt 3,800 comes in directly from here. Okay. What is the opening balance? It is said to be 5,000 rupees. We need to maintain 10 percentage. 10 percentage to be maintained as provision. So out of 39,200, 10 percentage is 3,920. So balancing this, the balancing figure will be the additional provision to be created. Now in P&L account. In P&L account, bad debts 3,800 less opening provision 5,000, add closing provision. So this balancing figure will be the amount that comes in P&L, same matching with this. What happens to bad debt recovered? Bad debt recovered will get credited to your P&L account. The link of our Telegram group is placed in the description box. So you can join the Telegram group where we'll be sharing you the Excel, which you can use it for later reference as well. Thanks for watching and stay tuned for the next question paper analysis.